I'm Kelly Kowalski, Head of Investment Strategy at MassMutual, and you're watching Taking Stock.
We're going with them. Let's rock and roll. 2 minutes to go into the close. Once again, oil moving higher, stocks moving lower on this Thursday, March 19th. Let's kick off the Taking Stock broadcast down here on the trading floor of the big board with the one and only Peter Tuchman, the Einstein of Wall Street. Look at all these cameras, Peter.
Fantastic.
Everyone's here for
Yeah,
you, my man.
go.
Quite the reversal we had at the beginning of the 3 o'clock hour. Suddenly the index has swung to positive territory.
Yeah, it's
We're
crazy.
back down. What did you see happen?
Well, when you see that, we had $2 billion for sale all afternoon. Tomorrow is one of the largest, $190 billion trade in the S&P rebalance, one of the largest in history. So I thought that, okay, it made sense. There was going to be a lot of overflow from yesterday's Fed meeting, which was really disappointing. But the fact that the market, in the light of $2 billion for sale, plus all that's in the wings, to rally that kind of way, it had to be news out. The rumored news was that the U.S. Unsanctioned Iranian oil, which is so far cry from what reality could be, that just sort of mocked the fact that that could have happened because the rally was unsafe. Something's going on. Either we don't know about it or the market's just in this complete, psycho mode. I think we're suffering from PTSD.
Yeah, we got just a minute or so until the close. We'll have to leave it there, but we'll see what tomorrow brings. And then in the rebalance, that's a big one. Options expiration in the close as well.
Yeah.
Please come on us.
A lot of flow going on.
Join us tomorrow if we
I
get a
will.
sense of what happens at 4 o'clock. The Einstein of Wall Street, thank you for being here. The team from Xylem here at the big board. This is ticker symbol XYL. Here now to do the honors for a wild day here on Wall Street. We'll kick up the Taking Stock broadcast on the other side after this. And there you have it, your final tail of the tape for this Thursday, March 19th. The S&P 500 down 0.25%. The Dow 30 will sell off about 0.4. The New York Stock Exchange Composite Index on this Thursday down 0.25%. And the Russell 2000 in positive territory. Shout out to the small cap stocks, having all things considered a pretty strong session, up 0.6. Few other technicals to run through. The S&P 500 traded basically the full session below the 200-day moving average for the first time since May 23rd of last year. And despite a positive session for the Russell, the small caps overall inching a lot closer to correction territory, defined as a 10% drawdown off of its recent highs, in this case for the Russell on January 22nd. The Dow is getting a bit closer to official correction territory. Really tells the tape for how choppy, how volatile things have been the last few weeks since the outbreak of the conflict in the Middle East. Gold and silver both in retreat. The crypto majors down as well. All 7 of the Mag 7 tech stocks in negative territory on this Thursday. Let's bring in our first guest, Nancy Davis. She is the founder and portfolio manager at Quadratic Capital Management. Great to have you here today.
It's great to be here, JD.
Thank you for being here. This is like we need whiplash and a neck brace to keep up with these markets. They were down, then they were up, and they were back down.
I know.
More broadly, how do you approach this type of uncertainty and lots of volatility in these markets, Nancy?
Well, I'm thrilled to be here. I consider myself the queen of volatility. I'm long ball, so one of the few people who are happy today.
Okay, absolutely.
Yeah.
Talk to me more broadly what you've seen for the most, a slight oversimplification, but for the most part, as we've seen oil move up, especially Brent crude, we tend to see that be a drag on the other end for equities. What's your expectation? How are you continuing to trade, especially the volatility in oil prices?
Well, I definitely think the market has totally repriced the Fed cutting rate. So the market was expecting that the Fed was going to cut 60 basis points before the Middle East conflict. Now we're down to less than 1 cut for all of 2026. And as you pointed out, JD, the RBA did hike this week. The ECB, the UK, they were both hawkish coming out. And Powell's press conference yesterday, even though the minutes themselves were dovish, his comments were pretty darn hawkish. So I think it's a great opportunity to have exposure to the yield curve steepening, because right now expectations are so low that the Fed's not going to deliver these hikes, even with the change to our new Fed chair coming up soon.
Yeah, of course, assuming the timeline for Kevin Warsh goes through the way we had expected to be, though we got a little bit of news, Jerome Powell essentially saying, hey, maybe I'll stay on as chairman pro temp while that plays itself out. Powell, ironically, may be in the role longer than we had previously been expecting. Flattening yield curve, what did you make of the broader yield curve moves today? What parts of the yield curve do you pay attention to? You think the rest of us should also more closely follow?
Yeah, I like watching the yield curve, specifically the 2s, 10s, JD. I feel like it's a nice way to look at inflation expectations for the longer term, right? Like the yield curve it's the difference between the 2-year and the 10-year interest rate, right? I think it's a great measure of where people expect stagflation, inflation expectations. It's really a risk reward between if you take more duration or if you don't. And right now we've had this huge move in the front end because of the expectations for the Fed cuts just evaporating. They're just gone. And so it's a totally different time now, because coming into 2024, remember we had 6 cuts priced in to the rates curve with all these expectations for cuts. Now there's nothing expected. So it's like upside galore if, things in the Middle East get resolved. If we do have, we can have central bank divergence too, just because the ECB, the UK, the RBA, as you pointed out, are hiking, doesn't mean that the Fed's not going to cut.
Yeah,
and
absolutely.
Inflation's not dead. I think that's the big message.
Yeah, of course.
We have to be frugal about, everybody has a certain amount of, we all have savings, right?
Sure.
And inflation is the thief in the night.
And of course, we had that hotter than expected PPI inflation print for wholesale yesterday. That set the temperature for the markets before that Fed press conference. I've got less than a minute. Can we go back to memory lane? March 6 years ago, March of 2020,
right,
which is a time that investors don't want to remember, but you were here for a
here.
rather remarkable day in New York Stock Exchange history.
I closed the bell, rang the bell on the close for the iVol ETF on, I think it was March 12th, 2020. And the next day, the exchange closed, went entirely electronic, so nobody physically here for, I think, 4 or 6 months. And it was the worst down day in the U.S. equity market since the '87 crash, and before that, since 1929.
Yeah, that's right.
So it was pretty momentous. But I wore my green dress, and it was good luck.
Yes.
I got a different shade of green on today.
There you go. And it's nice to have you for a day that's not historically in the red. A little bit of red across the major market indexes, but please come and see us anytime. It's great to have you here.
Thank you.
Nancy Davis, founder, portfolio manager at Quadratic. Thanks a lot. Nice to have you.
Great to have you.
Josh will grab your microphone. You and I will head this way. Todd, for the latest analyst calls here on Wall Street. We'll start with the latest from Raymond James, reiterating NVIDIA as a strong buy, raising the price target from $291 to $323. Trading pretty range bound. NVIDIA had a nice spike around October, but for the most part, we've been range bound since July. Shares are down 6% so far year to date. Evercore ISI upgrading Union Pacific to outperform. They say the railroad company is a must own right now. Currently stuck in a big downtrend, down about 10% the last 4 weeks as well. And finally, William Blair, analysts upgrading 5 and below to outperform following earnings. They say this particular dollar discounter is well positioned as investors seek out defensive, consistent names in a rather tricky consumer environment. This is not a typo. Shares of 5 and below up 217%. Over the last 52 weeks. Tells you a lot about where consumers are rotating to as they continue to value shop. We'll take a look here, Todd, at 2 NYSE notables. We'll start here with CCL. This is, of course, Carnival Cruise Lines, having a strong tape today, up 3%. Morgan Stanley upgrading the stock this morning to overweight. They say both the cruise company and the industry are actually in better shape than we've seen in prior downturns, calling it an attractive risk to reward balance. Shares of Carnival are down about 20% on the year, but got a nice pop on that upgrade from Morgan earlier today. And we got to talk Nike here. Shares down fractionally, only 0.06%. UBS lowering its price target to 58. This has been caught in a brutal downtrend as of late. This is now trading all the way back about $53 a share, where it was at its lows last April of Liberation Day. Before that, you got to go all the way back to 2017 to the last time Nike traded at these levels. They are set to report quarterly results next Tuesday. Shares of Nike, it's been a brutal tape as of late, down more than 15% so far here in 2026. Cheddar's very own Justine Miller sat down with Goodfin CEO Anna Jufi to discuss the future of agentic investing and much more. Take a look.
We're here now with the founder of Goodfin. Thank you so much for being here, Anna Jufi. We really appreciate it. And we're so excited to learn all about Goodfin. So tell us a little bit more about what it is and how it works.
Thank you so much for having me. I'm really excited to share. So at Goodfin, we are building at the intersection of AI and wealth. On our platform, we offer investment opportunities in private companies. They tend to be high growth, late stage tech companies in areas such as AI, defense, space, and robotics. And we have built really ground up using AI and designed an end-to-end investing experience to take the user from start to finish using AI.
It's so interesting and such an interesting concept to be using AI in this way. Why did you decide that right now is the right time to start this?
You know, AI is now reaching really transformative potential, especially in finance. And so the underlying models have become increasingly powerful. But I have firm conviction that being able to purpose apply and purpose build for, let's say, an investing use case is key. And combining not just the AI and the technology, but with the underlying investments and the financial product. So what AI is able to unlock, let's say for an individual accredited investor, are a lot of the kinds of tools that have been gated and reserved for very large institutions that can afford big investment teams and a lot of sort of data and resources analytics. And that's exactly what we built at Goodfin.
Yeah, it sounds so interesting, but also like such a huge undertaking. So tell us about some of the challenges when you're trying to build all of this from the ground up. How has that been?
It's been a really interesting and also wild ride. So again, I think where the underlying models have come, even in the past quarter, is markedly improved and stronger than where it started, let's say in 2022 and 2023. So if you were using ChatGPT then and you were to use it now, it's really a very different experience. And again, like because those underlying models have become that much more powerful and we've been building now for a few years in this space, the vertical application, let's say into investing into these domains, have now started to really come to fruition. And so what we have built is a pretty complex orchestration layer on top of multiple models where really you can think of dozens of specialized workers. We call them agents, but they're really doing autonomous or semi-autonomous workflows and tasks. And it's really not like a deterministic task. The idea is that these agents are taking steps. They have an objective, they are working towards it, and they are making decisions along the way. They're working independently, but also in a coordinated way. And that's how you're able to really unlock a lot of these workflows and tasks that would have taken a team of people to do.
That's so interesting to use all of that, kind of harness that AI power to really make this platform. Tell us a little bit more about the opportunities that this unlocks, especially for, retail investors, people who are going to be able to use this platform and really unlock an entirely new way to do things.
The unlock, I think, is hard to overstate. For example, on Goodfin right now, you can run a deep research report. It takes several minutes. It's actually a very extensive report that's pulling from a number of sources, both proprietary as well as web and third party. And a team of agents is putting that together. They're analyzing the sources, they're vetting them. One is drafting them, one or more of them is drafting them, one's checking them. And so that report now almost instantly, or at least within minutes, is producing something that could have taken a week or more of real professionals to do. And I think the bottom line is AI is now at a place where it is able to productize and expand access to professional expertise. And that is a new unlock that this technology does. And so, really, like if you think about that, you think of all the expertise that is locked in, behind Wall Street, in financial legacy institutions, at advisory firms, to be able to turn that into software for both the benefit of institutions, advisors, as well as the individual user is what we're talking about here. It's really transformative.
Yeah, it's incredible to kind of take all of that knowledge that is really behind closed doors so much of the time and make it accessible to people.
Exactly.
So interesting to think about all of these things coming together and where it's all going to lead. Thank you so much for being here today. Really appreciate it. Thank you.
Thank you.
Welcome back to the show. Frederick Griegard joins us now down here on the trading floor. He is the CEO of Cardano Foundation. Welcome to the exchange and welcome to the show.
Thank you very much.
It's nice to have you here. Explain the use of blockchain technology for cryptographic verification of earnings. What does that actually mean?
Well, it means everything, right? But if you think about it, right, it should nearly be like a treasure that everybody requires, that you can trust the numbers from all the companies. What we see is an unprecedented time of volatility right now, which a lot of it is actually coming from deep fakes, right? So when you have the ability to verify whether it's real or not real, and even verify the numbers in close to real time, you can actually trust the companies, right? And that means that you can trust to go in retirement.
Talk to me about some of the key differences you see in overall crypto infrastructure between the EU and the United States.
Yeah, so we got MiCA, which basically is the stablecoin regime, right? And now you have the Genius Act, right? So basically the US, in a very short amount of time, basically parted the European Union and went one step further. And what we're going to see now is when the Clarity Act comes into force, the US is going to 10x the usage of blockchain for non-TradFi use cases is going to lead the show. Where the US has been behind before, they're going to take the leader post, and it's going to really be amazing for blockchain adoption.
I want to get your take on where we stand in the ongoing fight against AI misinformation. Anyone with a social media account knows the proliferation of it already, especially during times of intense geopolitics. How does a decentralized ledger like Cardano protect against that type of new age, newly emerging misinformation?
It's all about verification. You need to be able to verify the numbers, you need to have provenance over the numbers, and you need to have as many third parties as possible going in and saying this is correct. Secondly, we have about 300 companies in Germany right now running agentic AI, and Cardano is the collaboration layer, the identity layer, and the cybersecurity layer for these companies. So they are on agentic AI, doing amazing use cases. They don't even feel the blockchain, they just get the security and the collaboration from that. And that's going to be the future.
Yeah, and speaking of the future, talk to me about the utility of the infrastructure you're building, not just for the rest of 2026, but beyond.
Well, think about it. We're standing here now at the New York Stock Exchange, right? Which went through a tremendous digital transformation. What would happen if I could add 2 billion users tomorrow to the distribution of the New York Stock Exchange? That is the promise of blockchain today. There's 2 billion people who don't have a national identity. When they get one through the blockchain, you have distribution. It's going to mean massive change.
That'd be a lot more people watching the show too every day, I hope. Fredrik Rygaard, thank you for being here, CEO of Cardano Foundation. Best of luck with everything. Please come back anytime. It's nice to have you here.
Love to.
Don't go anywhere. A lot more Taking Stock coming up from the big board after this. Welcome back to the show. I recently had the opportunity to sit down with Matt Schultz of CleanSpark. We talked all the ways how Bitcoin miners are navigating the energy demand crunch and, of course, so much more. Take a look.
Joining us now is Matt Schultz. He is the CEO of CleanSpark, a publicly traded company, here to talk about the ways that Bitcoin miners are navigating a bit of a power crunch from data centers and AI expansion. Matt, it's really good to have you here. So, we're talking a lot about AI data center buildouts and the accompanying energy-related concerns. The data centers are competing oftentimes for the same electricity as Bitcoin miners. Talk to me about where you see the industry headed, with a lot of questions over a power shortage. What does it look like from your end, Matt?
Yeah, Bitcoin miners are uniquely positioned because there was stranded assets all around the country for the last several years, and Bitcoin miners can move in, secure land and power, and quickly monetize those megawatts. So now, as we're seeing an increase in demand from AI data centers, it's a different type of load. Bitcoin mining is an interruptible load where if there's a demand signal on the grid that there's a black swan event or a severe weather event, we can rapidly curtail and send power back. Data centers are more of a fixed, 5 nines kind of uptime requirement. But I think interestingly, the Nicholas School at Duke University did a study and said that there's an extra 100 gigawatts of capacity on the grid for AI data centers today, utilizing what they called curtailment enabled headroom, meaning that if those loads can be offline 0.5% of the time over the course of a year, there's plenty of capacity on the grid. So pairing Bitcoin mining, which is interruptible, with AI data centers is really kind of a unique approach, and that's how we're moving into the market.
How intense is the competition right now between AI data centers and Bitcoin miners for cheap power?
I think it's interesting. CleanSpark has 1.8 gigawatts of power under contract currently, and we announced back in November that we expected to begin to monetize some of our megawatts differently, utilizing AI HPC data centers leases with hyperscalers. And the inbound inquiry and the demand for that power is incredible. The conversations we've had with utilities indicates that the demand is significant, and the challenge is that they look to overbuild capacity. So there's always headroom on the grid, but if it's not used, then it's wasted. So it's kind of an interesting dynamic. Energy storage is still the jury's out on degradation and long-term sustainability of battery energy storage. So there are some unique challenges, but the competition is incredible. What we're finding is many utilities have pockets of power that they don't want to sign a fixed load agreement, but they're interested in blockchain specific tariffs. So what we're doing is migrating some of our Bitcoin mining to those areas that have less sensitivity and focusing the fixed load stuff in some of the more major metropolitan areas in which we operate.
Is it fair to say electricity is the most valuable asset right now in the digital economy?
Yeah, as a matter of fact, Elon Musk said chip production is increasing by an order of magnitude. Lithography for chip printing, there was $15 billion in CapEx spent in Q4. But what he commented was what we aren't doing fast enough is electrical grid energization. So there's a legitimate constraint. So I think owning land and power puts you in a real strong position in this market.
Yeah, I know you've been acquiring large power sites in the state of Texas. First of all, talk to me about those locations. And number two, is securing power right now a large competitive edge in the world of mining?
Yeah, massive. We have, I think a number of sites that are very favorable to AI and HPC loads. Some are more tailored towards training models. Some are more tailored towards inference models. But what we've done, the two sites we recently talked about are both, driver 9-iron outside of Houston, and a real critical market for AI and HPC between Houston and Austin. So they're very favorable locations. We secured enough land that we can build a data center for a hyperscaler, with any different number of rack densities, depending on the architecture that they're looking for and the cloud or the cluster that they're deploying. So having secured that land, and most importantly, both of the prospects we acquired in Texas are already through the large load study process with ERCOT. So it's not a hypothetical that at some point, someday, maybe in the future, they might. These have energization schedules that begin as early as 2027.
CLSK, that's the ticker symbol. The company Clean Spark, the CEO, Matt Schultz. Matt, thanks for being here. Nice to have you.
Thanks, JD.
Let's do it. Welcome back to the show. Money 2020's very own Scarlett Sieber is now back with a whole new edition of Hindsight 2020, where she breaks down what happened on this day in finance in world history. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Hindsight 2020, where regulators, markets, and history meets for a three-way plot twist. Get ready, this one's going to be fun. Nothing says the party's over quite like the Fed telling banks, all right, the fun's done, put your big girl pants on. Today we're going to be heading not that far back, only 5 years ago, back to March 19th, 2021, when the Federal Reserve announced it would not extend supplementary leverage ratio relief, better known as SLR relief, a pandemic-era measure that temporarily loosened capital constraints on the banks. Translation: banks got to ignore certain assets like treasuries and Fed deposits when calculating leverage, the regulatory equivalent of work from home with your sweatpants on. But on March 19th, the sweatpants era officially ended. Instantly, banks needed more capital for the same balance sheets, treasury markets shifted, dealers adjusted inventory, bond yields moved, and fixed income traders aged 5 years in one afternoon. This wasn't a headline-grabbing decision, but it was a plumbing-level event, the kind that changes how balance sheets are managed and how liquidity flows across the whole financial system. It proved something important. Temporary relief is, you guessed it, temporary. Regulators giveth, and they absolutely taketh away. The core of banking is still discipline, even when the world feels chaotic. And with that, back 5 years ago for our Hindsight 2020, that is a segment today. Because in banking, stability isn't an accident, it's engineered one rule at a time. Back over to you.
Let's do it. Welcome back to the show. First and foremost, got to wish a very happy birthday to our very own Zuzana, one of our incredible I don't have a cowbell. One of our incredible producers in our control room. Very happy birthday. Hope it's an incredible day for you. The S&P 500 final tail of the tape down 0.2%. The Dow 30 down 0.4. NYSE Composite Index down 0.25%. And the small caps, how about the Russell 2000? The big winner up 0.6%. Also at this hour, 16th ranked Siena holding on to a 47-43 lead against the Duke Blue Devils right now in the first round of the tournament. Hang on, folks. We'll see what that brings. No major economic data releases tomorrow, but that's it for today's show. We'll see you tomorrow from the big board.